Hello everybody, my name is Chris Day. I'm the managing broker of Worth Clark Realty. In the Villages, I have just shy of 50 agents that work for me. I am also a working broker. One of the things that has helped me be successful over the course of time is partnering with other top producers. You've seen a previous video with Tim Bascom with Allstate Insurance. And today I have the luxury of being here with Chris and Amy Setzer. They're with the mortgage firm. So welcome you two. I'm glad you could be here this morning.
Thanks for having us.
And the neat thing about the Setzers and I is a couple of months ago, we did a huge party for all our customers at the American Legion. We invited everybody. It was a fantastic event.
Oh, yeah.
I was so happy to partner with these two. All of our past clients were extremely happy. But those are the types of things we do for our customers. We like to stay in touch. We are there for you before and after the sale. So in today's interview, we're going to cover about 10 or 12 questions that I think are important to you if you're at home looking to do a mortgage. So definitely tune in and watch. If you like the video, please subscribe and hit that like button. All right, so do you two want to kind of give a general little introduction of yourselves to say hello?
Sure, more than happy to. So Chris and Amy Setzer with the mortgage firm, Team Setzer, and we have been working for the mortgage firm, me for about 7 years and Amy for about 5 years. We are the branch managers for the local mortgage firm here in the Villages, Florida, and we serve the Villages and all the surrounding areas, and we keep excellent communication with our customers, and our motto is closing simplified, which Amy does a fantastic job of helping our clients do, as do I.
Yes, I can't give these two enough credit working with them. They constantly are communication. They work hard. They've even been known to, when there's technology challenges, to run and pick up paperwork and stuff locally. And that's just the type of people I need to work with. People that glorify what I'm trying to do and make my job easier. So anyway, let's get into some of these questions. So first one is, I was doing an open house recently. I met a gentleman there that in talking with him, he was purchasing down the road, but he had good assets and a net worth. But in peeling back the onion, I could tell that he was working with an out-of-state local lender to him. And that lender didn't mention doing an IRA distribution to help him qualify, and he was actually going down a pathway and jumping through some hoops, I could tell. And I told him, you really need to work with a local lender here in the Villages that knows this community and knows how seniors get mortgages. So can you touch on that from your experience?
Absolutely. We come across this situation a lot. Lots of people start out moving to the local area and talking with their local bank first. Many times they find out that that local bank is out of state, right? And as they're talking with them, they're finding out that maybe they could do it, maybe they can't, but that's just their starting point. The biggest reasons that we want to see our clients work with a local lender here is because the Villages and the local retirement communities is just a very different place. And we know that we're working with local appraisers, working with local title companies, that is going to be the best way to be able to get the job done. And we also understand, I know you touched on the client not really understanding what their income may be, and maybe we need to be able to utilize additional income. We always are going to look at what a client has for income first and try to work with it. What they're most likely trying to do is overcome debt to income ratio issues. And when you have debt to income ratio issues, a lot of times those can be overcome with other things, like eliminating some debt that they have. So we always look at the big picture for a client and try to get them the best scenario with the least problems. Now, you mentioned IRA distributions. It's a great way to go about it for our fixed income retirees to create additional income, but sometimes there's penalties, costs, tax implications with that. So we're always wanting them, if they're thinking about doing that, to talk to their financial advisor and also to have us, if they need to, if they're not sure what they're saying, what they're asking, how they're talking to their financial advisor, their CPA, we'll do conference calls with them. We'll talk with them together to make sure they all understand what they're trying to do, and then make sure they're getting through any of those implications that they have. But the very best way to do it without any penalties or any problems is to start eliminating possibly some debts first. There's also their fixed incomes. Most of the time when they talk to us, they give us their net numbers. And we can actually use most of their gross numbers. So before they take any deductions for Medicare, insurance, taxes. And so we want to get to the bottom of that, see the paperwork first before we make any good suggestions.
Awesome. So another thing that leads into that question is a few times in my career, I've had lenders at the last second asking for PUD disclosures, which are planned urban development disclosures. Again, this touches on the importance of working with a local lender. I've even had some that didn't factor in the bond monies or prorations of that, and it really caused issues with that debt to income ratio because they didn't factor in that additional portion of the tax bill. So again, can you touch on that where you maybe have seen it or have had to maybe clean up another mess or something from another lender?
Sure, and I think Amy's actually dealt with this quite a bit as far as the PUD and where our company comes into play for that.
Yeah, absolutely. Not only do Chris and I live locally, we're extremely familiar with the villages and all of the retirement communities around here. Our underwriting team is aware that the villages is a PUD. I have documentation to support that I can provide, so no realtor, no title company, no borrower has to bother themselves with trying to prove that. Our appraisers are all local. They are extremely familiar with how the villages is run and that it is not an HOA or a PUD, that it is a CDD. And so making sure that you have a local lender who understands the villages and the retirement communities here can be very beneficial and time-saving.
Yeah, it's also going to make sure that there's not delays, because if they're going through the entire process thinking it's a PUD, they're asking for things that they don't need, then they're reaching out to real estate agents as well as the buyer and asking them for things that they don't need. So it really muddles up the process and delays things.
Yes, definitely. There's nothing like getting that and hey, we need this, and then we need to put it back through underwriting at the last second. It's like, whoa.
We do so much in the villages that it's literally posted on our help site at our corporate office for every new underwriter to understand exactly what they're looking at.
Beautiful, beautiful. I love that. I can tell you a lot of times folks come in the market, maybe planning a purchase, maybe not, maybe it's spontaneous, but I really want to get into the importance of getting pre-approved before they come, because I feel like a lot of times tax returns, bank statements, documents can be more of a challenge to get long distance. So can you touch on that, getting pre-approved prior to visiting?
Sure. Well, first let's talk about the difference between pre-qualification and pre-approval, and then we'll dive into that. So we get this question a lot from our clients. So pre-qualification is that we've pulled credit, we've seen what's there, and we've talked about everything else verbally. That's the income, the assets, all of that. And we've got a good idea of what it all looks like, but that's still just pre-qualification at that point. Pre-approval, the next step up, is getting all the documentation that proves what we're talking about verbally. And it's so important to have all of that, because issues, problems with underwriting documentation that the client doesn't even know could come up, may come up, depending on what documentation they're providing. And it's like we tell everyone, when you send one piece of documentation in, it can open the door for an underwriter to ask for additional documentation to talk about that. So being pre-approved before you get down here gives you the opportunity to be able to go out and shop freely. I can't tell you how many people, and you know this, you've seen this so often around here, they're just hanging out on vacation for the week with their friends, and their friends are like, hey, there's an open house, you should go look at it. And they go see it, and then we're getting a phone call, hey, can you get them pre-qualified really, really fast? And we're talking to the client, and they're like, I don't know what kind of income I have. I get it. My financial advisor gives it to me. Oh, it's the weekend. He's not available. So we want to make sure that we're trying to at least get pre-qualification, if not full pre-approval before they get here. And pre-approval doesn't take very long. So pre-qualification takes 30 minutes to an hour for us to kind of run through the scenario and make sure it works, call back the client. And pre-approval, depending on how fast they can get us the documentation, a little bit longer, because we have to review that documentation and possibly ask for additional. We want to get them done so that they're ready to rock and roll. And that pre-approval is going to give them a leg up when they go in for that offer, to make sure that the seller and the listing agent knows that their income, their assets, and credit has been reviewed, and they're a good bet.
Awesome, awesome. That leads into the next question, you two, is there a list out there of what documents that you need that someone can use as a resource? Like, hey, I need to have X amount of tax returns and bank statements and all these things. Is there a resource that you can provide?
Me, I'm the resource.
Amy's our best resource.
So once we've done a full pre-qualification and we've asked all the right questions, we have a very good idea of exactly what documentation should be needed. So in general, you always need income documentation, asset documentation, and documentation to support any homes that you may own and any fees that are associated with those homes. And of course, we need a copy of your driver's license. But once we do a full pre-qualification, we can get you out a list within minutes to get that documentation gathered. We review that documentation, let you know if there's anything else needed prior to even putting it in underwriting, so that we have a good idea of where you're at. So, but yeah, in general, just income, assets, and costs associated with any properties that you own.
And for our out-of-state borrowers or buyers who are coming into the local market, we have all online resources. So you touched on earlier that, yes, we go out to our clients' houses if we need to, collect documentation and scan on the spot. Drive them to the bank, whatever needs to be done. But realistically, we have everything from meeting in the office and going through it in pure detail on paper to everyone going to our online portal and being able to just upload that documentation instantaneously and it coming to us to be able to see. So those out-of-state buyers, we have all of those online resources that you need, even as a local lender here.
I love that. I can't tell you in my career the importance of, let's say, like you said, just having a pre-approval letter and having it actually vetted and going through some sort of underwriting process.
Right.
I've had some that weren't worth the paper that they were written on, and when it came time to week or two before closing, you're having that moment going, oh my God, and the lender hadn't done their job. So it's extremely frustrating on my side.
If you wouldn't mind, I'd like to touch on that for a second. So we do actually see that quite a bit. I can't tell you how many times that we talk with a client who's already been pre-approved, and I'm going to use the air quotes for that, with their out-of-state or online lender. And as we start going through the questions, because they didn't like the outcome, or they were told, oh yeah, by the way, now you don't qualify. And as we start going through the questions of pre-qualification, we find out that they weren't even asked specific things, nor did they give any documentation. You remember just a minute ago when I said pre-qual versus pre-approval is the documentation that's necessary.
Yeah.
And they've been pre-approved by this other bank without any documentation being given. And that's just not how any of this works. So you're right, it happens a lot, unfortunately.
Yes, unfortunately. So we went out to breakfast a couple of months ago, and I had asked you a question, who do you feel your biggest competition is? And one thing you mentioned was Citizens First Wholesale Mortgage. And in turn, that always surprises me because what I know about Citizens is typically their interest rates are higher. But I wanted you to touch on what you know, because if that's your biggest competition, I want to know how it separates you and why you two are better.
Sure. Well, first of all, I mean, as far as I'm concerned, between communication, ease of use, contact, I mean, when people call us as opposed to a bank or anything else, they're reaching me right here. Okay, that's who you talk to. You're not talking to 14 people in our pretty large corporate organization. You're not talking to those people. You're talking to me. You're talking to Amy. And so when it comes to that, I don't think we have any competition in the local area as far as communication is concerned and as far as ease of use is concerned.
And I'm the direct communication with the underwriter and the client when it comes to documentation and pre-qualification. What's the word I'm looking for? An initial underwriting. I'm the direct line of communication. So you're not talking to somebody else who you've never even spoken with in the process. You're always speaking to me. You're always speaking to Chris, and that's really important.
But I have heard a few things, because as you can imagine, working in the local area, you can't really walk around or drive around anywhere without seeing a citizen sign here or there. But what we found from a lot of our customers who have used them in the past is that they're going somewhere else. Why? There's probably a lot of reasons. You mentioned rate. I've heard communication and some of their regulations. But I'm not sure. Nobody's been direct with me on exactly why that they can be problematic. And I think everybody just has to make up their own mind to that. But I will say this, as far as the local area, I don't feel that anybody touches us in regards to communication, keeping track of what's going on with your file, and keeping people updated as to what's going on. And by people, I don't mean just the client. I mean the realtors, the title companies, the appraisers, the inspectors, keeping everyone involved in good communication.
Awesome. So one thing I don't think is talked about enough from a lender standpoint, or buyers at home understand, is what a mortgage recalc is. I feel like there's a lot of buyers that sometimes come here.
You recast?
Recast,
gotcha.
Excuse me, recast. Yeah, there's actually a blog on my website about what a recast is, but I definitely want you two to touch on that, because I've seen where people find the perfect home, they really want to do something, they were going to have a mortgage anyway, and I always say, well, could you afford a higher payment for a couple of months until your home sells and you dump that money into the conventional mortgage here and recast it? But can you touch on that more from a lender level?
Sure. There's lots of reasons why people do what's called a recast. Let's talk about what that is first. So a recast means that I've already closed on my loan. Let's say I've got a $200,000 home and I'm getting a loan for $150,000, right? So my loan is now set, $150,000 amortized normally over 30 years at a fixed rate. Well, at some point I come into some more money. I sold off an asset, I sold a home, I won the lottery, I inherited some money, whatever that may be. And now I still want to carry a mortgage, but I want to put a portion of that into my principal balance. Now, in normal, you can put money into your principal balance, whether that's weekly, monthly, annually, and there's no penalties for that. But what it doesn't do is change your monthly payment, because that's already been amortized out. However, a recast allows you to be able to put in that money into your principal balance, lower the principal balance. Let's say I have that same scenario, I have $50,000 that I'd like to put in. Well, now I'm only going to have a $100,000 loan, and the amortization schedule, without changing interest rate or anything else, is going to be a recast and lower that monthly payment. And that can be done with most lenders, and it depends on where it lands on the secondary market as to the servicing department and whether they will allow that. And it's usually after somewhere around 10 to 12 months from the closing, or around 8 to 9 monthly payments. After that, then they will usually allow for it. But it's a great way to be able to lower the monthly payment, therefore fix your budget a little bit without all the monies that it takes to do a refinance. And if that's the right way to go, that's the way we want to help our clients go, so that we can save them money. Because it's not about how many loans I can do with the client, it's about how much money we can save them, and that's our goal.
I definitely am surprised more people don't know about that. I feel like people always think, geez, I'm gonna have to refinance in a year, and it definitely needs to be out there more.
Sure.
So another thing is that I've seen where buyers are going through the loan process and they go and finance a car, or the one I see the most is they go over to Home Depot or Lowe's or Best Buy and finance a washer dryer. I know that's like a silly thing, but I want to make sure a lot of people at home have not done mortgages in 10, 20, 30 years, and they may not be aware of some of these things. So I wanted to make sure you explained how that can be a very difficult thing to deal with.
Certainly. I think Amy's got this one covered. I just want to add one thing to the front of it, is that when our clients are in the process, we try to explain to them, how long, people ask, how long is your pre-qualification or pre-approval good for? It's good for as long as your credit report's good for. So as long as you're not going out and financing a $60,000 Porsche that we don't know about yet, you're good. I think that ties into exactly what you're saying, is what we can and can't do once we're in the process, and Amy has a solid handle on this.
What a lot of people aren't aware of is we do an initial credit pull, but 10 days prior to closing, or within 10 days of closing, we have to do what's called a credit refresh. It's only one bureau, it's a soft pull, it doesn't hurt your credit, but it just updates us to see if anything has changed on your credit profile. Financing vehicles, financing furniture, financing appliances, can affect your credit profile Having new inquiries on your credit from new creditors can also affect your credit score, and all of these things can factor into your debt to income ratio, and cause a hiccup at closing. So it's really important. You can use your credit as usual, but any large purchases, any large movements of money, even between your bank accounts, talk to your lender, talk to us. We'll advise you on when the best time is for you to make those purchases, or what the best path forward is for you to make those purchases. And sometimes those things may have to wait until after closing.
I'm going to add to that. As she said, talk with us first. Let's have a discussion. You want to move monies around, you want to charge things up in your credit card, please just have a talk with us before you do it.
Yes, I can speak from experience. One time in my 20-year career, I had someone buy the dream house and then go buy the dream car, and the dream car
killed the dream house.
Killed the dream house, yeah.
And you know, it is true. The average household today has $1,200 of monthly car payments, and it's many times we talk with not only our seniors with fixed income, but also our first-time home buyers in the outlying market, that we have to say, you know, like at this point, you're actually driving around your mortgage. And that's unfortunate, but yeah, those can really cause hiccups.
I like that you're driving around.
And maintain your monthly payments. Make sure you're on time for all your payments, because we do check for any late payments as well. So
awesome. So another thing, and this is getting back to Citizens, I think a lot of people use Citizens when they're purchasing a new home out of fear that if it doesn't close on time, I'm going to be penalized. So I'm going to put you on the spot here.
Sure.
Have you missed a closing ever on a new home deal?
No, we don't miss closings. I'll say this much: if it is in our control, we are going to get it done, and it's going to get done on time. But there's many parts of the mortgage process that are not in our purview, that are things that we have to watch after and make sure happen, but that other people are in charge of, and that could be a lot of different things. I know Amy deals with this a lot as she's talking with our third parties. But truthfully, if it can be done and it's under our control, we'll get it done, or we'll harass the snot out of the person that needs to get it done, right? We want you to close on time.
Working with a lender who's in constant communication with the appraisers, the title companies, the buyer, the seller, the agent, and I'm not the seller, but the seller's agent. It's really important that we have all parties involved to make sure that all the third-party services are completed on time. And that way, you know, you're not running into an issue at the very last minute and unable to close on time.
But that's where good upfront communication that we've been talking about fixes so many things, because if you're communicating about it on day 1 and day 5, then when it comes up again on day 15, everybody's already been aware.
Yeah.
Sure. So in this market, I typically see cash deals or 20% down conventional deals. I actually was talking with you recently, cash deals have been on the rise a little bit. I pull reports monthly, and I would say it used to be, in my opinion, a 50-50 market. When I've looked lately, it's maybe up 10 or 15% the cash deals versus mortgages. But
sure.
I wanted to make sure you touch on the different loan products that are out there that seniors may want to consider outside of the normal cash or 20% down conventional deal.
Sure. Well, first off, let's touch on why so many cash transactions. And I think part of that has to do with generationally. I know my parents, my grandparents, all of them we'll pay off the home, got to have it paid off. But if you talk to any financial advisor today, the one debt they want you to have is a mortgage. And I think so many people maybe don't think about that, or they're well off enough that they don't need it, or don't need the write-offs or whatever that comes with it. And that's okay. But when it comes down to the products that we have available, I think people skip a lot of really good products. And I think sometimes sellers and listing agents skip on a lot of really good products that are available, because they'll say, well, we won't accept FHA, or we won't accept VA. We have conventional FHA, VA, USDA. We also have non-qualified mortgage products as well that are kind of outside the box, bank statement type loans, things that don't fit in the cookie cutter of conventional financing. But it's always about what's right for the client first. So we want to go through, how many clients do we have that come to us, and not just seniors, but from a first-time homebuyer perspective, that say USDA, 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 and they don't know what they're talking about yet. They just see that there's a potential for up to 100% financing, and we have to go through and explain why that program either does or doesn't fit their scenario. And that's what we're going to do with every client. So they may have an idea of what they want to do up front, but we're going to help them to understand all of the options that they have and which option may be best suited for them. Another good option that we've talked about recently, and some of our clients have been able to utilize over the past couple of years, is as interest rates have gone up and investment properties become more and more difficult. They're putting 30% down at this point to get into them from a conventional standpoint. We've talked about where they're at. A lot of times they're purchasing a home not for real investment, but they're purchasing it locally because they need it for a family member.
Sure.
And they don't have any mortgage on their primary residence. So what's better? To come up with 30% down, they have to take from your financial advisor and possibly penalties and tax implications, and put that down on a home, and then have a higher risk being an investment property, so higher interest rates, more costs. Or to potentially cash out refinance on your primary residence that you don't know anything on, where the risk is low, where you don't have to come up with any of the money. It all comes out of the house, and now you can just go buy the house cash. So you're essentially doing a cash purchase with financing from your primary residence. And we've done that for several clients here recently.
Awesome. So that leads into another question. Chris, I know you're a veteran. That's how we were able to utilize and have that great party at the American Legion. I know I read something in the Villages Daily Sun. It said the Villages is the highest MSA, which I think is either Metro Service Area, is MSA, with a 15% veteran population.
Oh yeah.
I am always surprised that I don't see more VA loans throughout the course of, let's say, 100 deals in a year. I might see a small handful. Why do you feel they're not utilized enough?
Well, there's a couple reasons. So to start off with, in the local area, when it comes to new construction from the Villages, they don't actually allow for VA loans. I've tried to do a little bit of research about that and figure out why. There's 5 pieces of paper for a builder to fill out, so I'm not sure why they won't do that. But the other side of it is that there's a misconception a lot of times for both homeowners that are selling the property and the listing agents that think that VA is really difficult, hard to get through, and that there's problems. There's really not. So VA appraisers, there's less of them in the local market, and I think, like probably a third of what regular appraisers are around available. So if you can imagine, with that few of appraisers, it takes them a little longer to get to it, where a normal appraisal could be 8 to 10 days in the order. A VA appraisal may take 10 to 14 days.
But we've also gotten VA appraisals back in 2 days.
Right.
It just depends on the scheduling. So.
Yeah, and the other side of the VA appraisal, that this is what worries sellers and listing agents, is that they do a health and habitability check on the home. Well, what are they looking for? They're looking for things like broken windows, burners on stoves that don't work where the veteran can't cook, right? Holes in the roof that are going to be an actual health and habitability problem. So they're looking at things that are not necessarily happening in the area of the Villages. All right, the Villages is mostly really excellent homes, well maintained, in great shape, right? So if that's what you have, there's no need to be worried at all in regards to a VA home loan. And this VA home loan gives the ability for our fellow veterans to be able to get up to 100% financing, not carry any mortgage insurance, which helps them to have more affordability into the home. And they've earned the right to have this opportunity. So I say, if you have questions about VA, you're unsure, you're talking with a client and you just want to make sure that they feel comfortable with it as they're selling a home, give us a call. We will be more than happy to sit down and conference with your client, or come to their house and meet with them with you. And that way they can have a better understanding of VA home loans too, and that way we can see more of them in the local area.
Well, anything I know about VA home loans is, and you'll know this more than me, I've always read that they have the lowest default rate of any mortgage. So it's like, man, why are we not getting this more out there and generally accepted in the marketplace when that's on the other side. Am I correct on that?
Absolutely. There's the VA home loan is a guarantee, is guaranteed by the Veterans Administration. So there's a guarantee that's on it that acts very much like mortgage insurance. And that's what's offered from the federal government on the VA loans. But the lenders are VA approved lenders like the mortgage firm. And they're the ones that are out there, you know, putting up the cash to get it done. It's the VA that actually guarantees them. And because they are, yes, there's hardly any default. We don't see very much of it at all. And so it is a solid loan. I really just don't quite understand some of the poor thought process that's been put around it in the local area. Because yeah, American Legion, when I first got here, they were number 2 as far as membership in the nation. And within 6 months of me moving to the local area in 2012, they were number 1 in membership in the entire, it's not the largest building ever, but it is the largest membership in the country.
And I love that. And the other thing, and I want to touch on too, is they're assumable mortgages, right? So like that's been a neat thing that I've seen. Is anything you want to touch on there? Because I don't see a lot of that advertised or happen either, but do you want to touch on that?
Sure. So
briefly?
the assumability has to deal with the VA loan itself, and the veteran who comes to assume it or lender can allow for a non-veteran to assume it if they qualify for it. But the reason you don't see as much of it is because whatever is left over that the seller wants above and beyond what is owed on the property, the person either has to come up with in cash or figure out how to get secondary financing on, which is difficult.
Okay.
That's why it becomes an issue of not seeing so many of them. But if it is just a straight assumability issue, you have to talk with the lender that the loan is currently with. The VA doesn't make those decisions, the lender will make those decisions, whether it can be assumed by a veteran or can be assumed by a non-veteran.
Okay, awesome. And this additionally about, let's say, regular loans in general or VA loans, there's a common misconception out there that a conventional loan is going to take 30 days, and I hear quite a bit that VA loans are going to take 45 days. I know that not to be the case. Can you touch on maybe how fast you two have been able to do a mortgage in this market?
Oh, absolutely. I think that's great.
Well, so a conventional loan can take up to 30 days, but depending on, there's a lot of factors that go into that. And same with a VA loan, there's a lot of factors that go into it, that third-party services have to be done in a certain amount of time. So yes, a VA loan can take up to 45 days, but there's a lot of factors that go into that. It depends on what kind of, whether it's a standard built home, a manufactured home, the appraiser, how quickly they can get out and how quickly we get the report back. But yes, we can close a VA loan usually in the same amount of time as a conventional loan, you know, as long as those other factors work into the loan process and the timelines are met in a timely manner. So
absolutely, and what we do, we normally, and I think all lenders do, normally ask when our clients are putting in a contract to be close to 30 days on a conventional and close to 45 days on a VA. That doesn't mean it's going to take that long. Because we can do them oftentimes a lot faster. Even new construction around here, you know, we hear you gotta get it closed in 30 days, or it's not gonna. Last 2 new construction loans that we've even done in the local area, we've been ready on day 20, and we've been told the developer needs an extra 10 days. So I don't know what that means, why they're pushing for 30, but yet we're ready and they can't.
That's beautiful.
Couldn't tell you, haven't been explained why.
All right, so another question is, I know people that look online, they see these great, sometimes teaser rates, and they say, well, Chris, I'm seeing online a blah, blah, blah interest rate, and down there it's whatever. And I always tell people, you need to not only look at the interest rate, but the APR, right? The
Sure.
APR is what's really bundled into all the closing costs and everything. Can you touch on that? Because I'm sure you deal with it on a daily basis.
Absolutely. Well, first of all, anything that you read with an interest rate on it, go ahead and read the 2 paragraphs or more of fine print below. We say around here, the large print giveth and the fine print taketh away. So it's so true. And one of the reasons that the mortgage firm doesn't do that, we don't do major advertised rates all over the place, is because by the time we've gotten it together, got it through our compliance department, put the advertisement out there with all the 2 paragraphs more of fine print that needs to be on it to make sure people understand why that's even being offered or how. it's already gone because rates change daily. They change several times a day. So it would already be gone at that point. But back to your point on APR. So when you have an interest rate like 7%, you have an APR is 7.25%. Gosh, that third page, the loan estimate, gets people quite confused when they start seeing that. So your interest rate is what it is. So in that example I just gave, 7 and 7.25, that 7% is what your interest rate is going to be amortized at over the whole period of your loan, whether it's 15, 30 years. That's what it's going to be. But when you look at the APR, that's what your costs are included in the start of that. So that's going to be loan costs, some of your closing costs are in there as well, and any points that you may have paid. So it's put there so that you can look at a loan estimate side by side and get a comparison approach. And I will say, sometimes we may not be the absolute cheapest that's out there, but you get what you pay for too. And I think we talked about that in the communication, all the things that could possibly go wrong. With quality means something. And we've learned that so much with Rocket over the last 5 or 10 years.
So my workspace as a real estate person.
That's all right. We have a saying around the mortgage firm is that friends don't let friends use a Rocket to get a mortgage. So only Wile E. Coyote.
Well, I hope everyone at home learned something today. If you did, please subscribe and hit that like button. My goal is to always get you good, tangible information for those of you considering a purchase in the Villages. I'm going to go ahead and put the Setzers contact information in the comments. Please feel free to call or email them. They will take very good care of you. You are in good hands with them. Do you two want to add anything to the viewers and say goodbye or anything?
Sure.
I'm putting you on the spot.
On the spot. No, this has been a great conversation with Chris, and we appreciate the time that he's put into this. And we look forward to working with all of you. Even if you just have questions, call us. We're here to answer anything. You don't have to go with us for a mortgage immediately, but you can talk to us about any questions, concerns, something coming up in the future, whatever you need.
Yeah, and again, Chris, we definitely really appreciate the time. And for our clients, we always want to take the time to ask as many questions as we can to give you the right answers. And sometimes that right answer may not even be, doing a mortgage at all or even doing business with us. But we want the answers to be the right answers for you. So yeah, give us a call. Give us the opportunity to be able to walk through your situation so we can ask you the same question we ask every client. Talk to me about what goal you're trying to accomplish so we can help you get there.
All right. Thank you all for watching. We look forward to meeting you at some point in the future, and take care.